Hey now. So here's the hard truth. If you are in the hobby of collecting baseball cards, sports cards, comic books, autographs, you can't take Schedule C, which means you can't take a deduction for all these sports, whatever your collectible is that you're buying. Here's the other hard truth. Most of you watching this video are probably in the business of collectibles, we're going to call all this umbrella, and not in the hobby. If you're actively selling your cards and you're getting a 1099, and we talked about the Trump's change to the 1099, the big beautiful bill in my other video, we're not going to go over that again. But if you're selling collectibles actively, you're probably in the business of sports cards. And I get asked all the time, I want to file Schedule C. What do I have to do? What's going to trigger this Schedule C? What's going to trigger an audit? People are so afraid of the word audit. I would take my glasses off. The truth is, the odds of you getting randomly audited, just random, the IRS picks you is less than 2%, especially now with Doge. I mean, I don't know if anyone's still working for the IRS, but the bottom line is this: you need to consider the fact that if you're doing everything by the book, you have nothing to be afraid of. Just the problem is a lot of people don't know the book, which is where I come in. But let's just give some red flags real quickly. The first red flag I see is people that are constantly filing a Schedule C and getting a loss. Now, Schedule C means you're in business for yourself, but you're still in a business. Businesses are in business to make money, not to lose money. I've had potential clients come to me saying, I don't ever want to pay taxes. And if you had to pay taxes, congratulations. That's a good thing. That means you made money this year. And the IRS wants to see that you're making money. Not every single year, but a good rule of thumb I like to use is 3 out of 5 years. Number two is the fact that I get a lot of people saying, I don't have a federal ID number, an FEIN number. Now, you don't need one. Anyone could start their own business as long as they have a social security number. That's all you need, social security number. That's it. That's it. And then comes the fact that, okay, I got no 1099s this year. I want to still do a business. And that's fine. You can, again, every penny you make selling stuff is considered taxable. And if you're constantly buying and selling, yeah, you are definitely deserving of Schedule C, even if you don't trigger a 1099, especially now that they increase the limits in order to get, I should say they raise the floor to get that 1099. So you don't necessarily need a 1099 just to file a Schedule C. Now, last year, and I won't mention names, but I got a client, and what happened was he had a very large one-time sale of his collection. And unfortunately, that means he wasn't in it to constantly resell the stuff. He wasn't using his profit. This is key here. Businesses use their profits to repurchase inventory to sell. His goal was just to sell everything, take the money, and buy a house. That's not a business. If you're selling something for your personal use, just to keep it, that's not considered business. That is a hobby, unfortunately. You can make an argument depending on the money. It's not truly a hobby that has a higher tax rate necessarily than a Schedule D, which is considered an investment. We could talk about hobby versus investment another time. We're just talking right now about when you can write off business expenses versus hobby expenses. And obviously, once you hit the hobby expense and it's clear as day that it's hobby, there's nothing you can write off. Absolutely nothing. So, again, let's talk about businesses. You're buying and selling. It's really important that you track everything when you can. When I say everything, everything material. Now, a lot of times I get a question, what is material? Material can be whatever you want it to be. It's up to you what material is. If you're selling $1,000 cars left and right, that's what your materiality should be. But if your materiality is more in the $100 range or the $10 range, that's fine also. It's not for me to tell you what your materiality is. Materiality, though, should be picking up, let's say, 75% of your sales. That is so important. So hopefully you're following me, you're watching my videos, you're subscribing to my channel. Shoot me an email. I'm happy to answer any questions. And as always, keep collecting.